please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, it's a good-looking screen. There's 46 points on the Nifty. You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. And over the next 1 hour, we will tell you what's going on in the market and, of course, touch upon the important stories of the day as well. So, you know, very different screen as compared to what we saw day before yesterday. I mean, completely different compared to day before yesterday. And then different from yesterday as well. There is some buoyancy, which is good to see once again. The Nifty Bank is up 1/4%. The PSU banks still not doing all that great, but not as badly as they were yesterday. The Midcap index has still got about 0.9% in terms of gains. So things are looking a little bit better as compared to how we started 2018. Ekta, morning, and let's just tell our viewers what stocks are moving.
Yes, absolutely, Prashant. Not to mention that the Midcap index is outperforming today. So it's been a bit of a rocky ride for the Midcap index in the past couple of days. But nonetheless, holding quite steady. And we have the Nifty, which is just about hovering at around 10,500. You did mention stocks. And Dr. Reddy's is top of mind because it is the top loser on the Nifty at this point in time. So that stock should come up for you. We also have, but not to mention that Dr. Reddy's has actually recovered from the day's low. VST Tiller Tractors. So that stock is reacting well. So up around 6% and Fortis Healthcare from the broader markets. Just look at that kind of move that we've seen. A lot of metal stocks which are doing well in today's trading session as well. From the Nifty space, we have the likes of Hindalco and Vedanta, which are higher. But let's get talking about the technicals of the market. We have Sudarshan Sakani with us this morning. Sudarshan, hi, over to you then for the Nifty. What's your call? Just about hovering at 10,500. Do you see conviction there? And your stocks as well.
Yeah, sure. Good morning. See, I don't see conviction in the Nifty. So there is an intraday trade to go long and then exit at the end of the day with whatever you get or don't get. I don't know whether the Nifty is now willing to go higher, at least not on today's pattern. So my view still remains it is likely to be sideways to bearish, but there is no position to take on the bearish side. There's an intraday call only on the long side and exit today, which means there is a sense of confusion in the Nifty. We are not overtly bullish as of now. But individual stocks are doing very well, and especially for today when we have a nice rally and a trending day so far. So I'm suggesting buying in all my ideas. First is Hind Unilever. Liver has been in an uptrend. A small consolidation is breaking on the upside today. It's a worthwhile buy. The second is Mindtree. Mindtree is part of that Midcap IT pack, which is doing exceedingly well. So consider buying Mindtree today. And the third is Sun Pharma, which is bucking the Dr. Reddy trend. It's already in an uptrend. So Sun Pharma is we are simply participating in a momentum that's ongoing. Keep these trades intraday because the market is not giving us a sense of purpose as of now.
Sudarshan, when we spoke with you yesterday, you essentially the view was a bit on the negative side. You were saying that the first couple of months could turn out to be poor. You still have that view, or open to new ideas?
No, Prashant, I still have that view. I just tempered it for the day, that's all.
Okay.
My view is that for the next few months, the markets are likely to be under pressure and lower levels are coming. See, intraday, 1 or 2 days, markets will do anything.
Yeah, no, absolutely. Got that. We have a couple of queries, so let's address those. Ramesh has 200 shares of L&T Finance at 180 rupees, and he wants to know the 3-month outlook on the stock. This is L&T Finance. Sudarshan, what would you tell him?
I think my near-month outlook is not bullish because I'm not very bullish on the Nifty. So that applies to most stocks. My suggestion would be he should sell. He's at par, more or less. And then wait patiently. All markets correct. And the Nifty is due for a correction. We can't time it. We cannot say when. But sell and wait patiently to re-enter at lower levels.
Okay, well, we have another one, which is Rajesh, 2,000 shares, Sudarshan. He holds of JP Associates at 28, and he wants to know whether to hold or sell that stock.
Well, with some regret, I have to say sell. First of all, this is completely news-driven stock. We don't know what news will come and how it will impact. Then the stock, even at current level, because it is news-driven, carries high risk. Why should an investor or small investor stay in such a stock? Sell and consider other blue chips.
All right, fair enough, Sudarshan. We're going to let you go on that note. Thanks very much for joining in and taking us through all of those strategies. Let's get in some more F&O calls. We have Yogesh Mehta of Motilal Oswal, who's now with us. Yogesh, hi, over to you. Midweek, so what are you recommending in terms of stocks as well as in terms of the Nifty call?
Yeah, good morning, Ekta. Overall, markets are very much in a stipulated range between 10,550 and 10,400 for Monday and Tuesday. And we have seen a selling pressure in the second half in both the days. So what we prefer is again the choppiness and the range bound trade will continue to happen, and there would be some opportunity in the stocks where considering intraday, as Mr. Sukhani said, I agree with him that one should trade intraday more than positional one, because you never know when the ride will turn out to be on the choppy waters. So better we are looking at 2 to 3 days perspective or the intraday one, where Tata Motors DBR is quoting at 256, 56.5 level in future segment. We are recommending to buy with a stop loss of 250 rupees with a target of 265 to 267 range. Another one is Titan, which has given a good range breakout today, and all-time high is 872 in spot. Currently it is little lesser than that. So on a conditional buy, if one wants to buy, then buy above for a faster and prompt move above 872 in cash, and then the target could be in the range of 895, keeping a stop loss of 855. Right now it is 869, so we'll wait and watch for that. And the third one is Tech Mahindra in IT Pack. All the IT sector stocks are in very much strong momentum. Tech Mahindra is quoting at 521.5 in future segment, keeping a near-term stop loss of 512. One can buy with a target of for the target of 540 rupees.
All right, Yogesh, thanks very much for that. We will get back to you for more strategies and trades in a bit from now. But I mean, the Nifty still got about 40 odd points or so. One of the stocks we were discussing early on was Dr. Reddy's Laboratories, which is selling off on a up day. It's down about 2.5%. Ekta.
Yes, absolutely. Well, it is the EIR that we have accessed for the Dwara facility. Remember that this is backdated information, but nonetheless it is important because it puts into context a further sort of micro look into the kind of observations that the Dwara facility has received. And all the experts that I've spoken to through the day have mentioned that it is probably the employee issues or the cultural issues which have stood out really in the plant in order to solve, and which might be something that they need to look at more closely. But the management has acknowledged that they are solving those kind of cultural issues that they have faced. To talk more about this, Praful Bora of Equirus Capital joins in on the phone line. Praful, hi, thanks very much for taking the time out. So I'm sure you've gone through the EIR. Your thoughts?
Hello.
Hi, Praful. Can you hear me?
Yeah. Hi, tell me.
Hi. Your view on the EIR for the Dwara plant?
So I had a chance, just to look at it on a very, very, broader basis. I think I would be probably worried about a couple of points where the FDA has highlighted issues with the employees. That they have miscommunicated certain information to them. So I think that probably would be one of the concerning points to me.
Okay, but in your sense, Praful, if you compare those kind of issues with past instances, how does it stack up in terms of the kind of remediation that the plant is needed? Because you can simply just sort of probably get rid of all the employees and start afresh, but then they would need all of that training to go through in order to become compliant with the facility and the way it works. So what's your sense in terms of the remediation which is needed for the Dwara facility looking at the EIR?
So one of the key aspects of the remediation process would be, to strengthen their training processes, because I think that's something which the FDA would have highlighted. I think that's the key. You need to train your people how to handle these kind of issues. That's one. I think and on a broader basis, I think the culture needs to change, and I think that's something which the management would be aware about.
Okay. In your sense, how long do you think it will take in order for the remediation to be complete, and maybe the US FDA to probably come back and relook at the plant?
But it's very difficult and it's very subjective, depending on when Dr. Reddy's is able to complete the entire remediation process. But my sense is probably in FY19 you should see a reinspection happening.
FY19.
Yeah.
Okay. And
maybe the second half of FY19, later part of FY19.
Okay. And otherwise, they've received a EIR for the Bachupalli plant, etc. So if you are talking about, say, the US approvals that Dr. Reddy's has in terms of a pipeline, how much would be factored in from Duvada, or would you have to probably readjust your estimates based on this?
See, Duvada is already under the warning letter. Okay, the risk is it escalating into an import alert if at all. Okay, two of the key products, I believe, Vidaza and Diclofenac from here, which is almost $80–90 million on the current base. So I think that may get impacted if it escalates into an import alert. But if it stays as a warning letter, I think the future approvals will get impacted, but the current business will not be. Okay. So to that extent, I think the risk on the the current earnings will not be there.
Okay, just a quick last question, because I think the street has always assumed that an EIR means the closure of an inspection. So this sort of changes the view on that. How would you look at how the USFT is going about, issuing EIRs? And because you did mention that there could be a probable escalation as well, which is not yet factored in. How do you look at that?
See, I'm not... I'm not saying that there'll be an escalation. It would really depend on how Dr. Reddy's respond to the entire issue. And they would have to provide a very solid response to this. And depending on how the FDA is satisfied, the issue can take a turn either ways. That's one. Secondly, I think EIR, general understanding on the market was EIR means closure of the inspection. I think probably it's more of a it can also mean a communication between the FDA and the company. So I think these sort of EIRs refer to that.
Okay, all right, Praful. Thanks very much for that. Thanks for taking the time out and explaining your view on it. Dr. Reddy's was at one point down around 3.5%, so it has recovered from the day's low, but still down a bit subdued at this point, down 2.5%.
5 points on the Nifty, 10,478 is where we are at. Futures have got another 35 points on top of where the spot is trading at. Some of the stocks which are getting beaten down quite a bit are coming up, and one of them is Jayaprakash Associates, which is up about 5% or so in the futures segment. At one point, JP sold off 10%, but it is coming up. And by the way, so are some of the ADAG stocks, which were all down 10% in a row, or some of the others as well. So some bounce going on. Let's take stock of what has been a tense situation here in Maharashtra over the last couple of days. The state is bracing for unrest and protests in several parts following Monday's deadly violence that hit a Dalit celebration. As a precautionary measure, Section 144 has been imposed in Thane till midnight of 4th of January. However, no holiday has been declared by the government, and schools and colleges remain open. Train services at several stations have been hit as protesters carry out 5-minute rail roko at Thane, Virar and Goregaon stations. My colleague Utkarsh, who's tracking the story, is now joining us with this report from Ghatkopar. Utkarsh.
I'm right now near Ghatkopar station, and as you can see, the effect of the Bandh is clearly visible here. You can see people have made a human chain at this point of time, and there are protests going on at this point of time. You can see the road towards the metro has been at this point of time blocked. In fact, this is a place which is very close to the police station. The police station is right here. And you can also see the shops that at this point of time are closed. There are also reports coming from all parts of the city of Bandh being effective. Trains also at this point of time are affected. Trains in Nalasopara, Virar and Thane, there have been reports. And I am right now reporting from Ghatkopar, which is the epicenter of the whole protest. And you can see that the Bandh has clearly affected the life in places like Ghatkopar and Chembur at least.
Okay, Utkarsh, thanks very much for in fact getting us that coverage, and we're going to keep coming back to him as and when he has incremental updates. But let's get back to what's happening in the equity, or rather even the commodity and the currency market. We have Manisha Gupta joining in to tell us what she's looking at today. Manisha.
Thank you so much for that, Ekta. Well, in the commodity space, you have to take a look at the fact that the US dollar has paused on its declines, and there is some stability coming in there, and that's the reason you have seen some profit taking in many of those commodities. While we have started 2018 on a positive note, today seems to be the day when you have seen some money being taken off the table, especially in case of the crude oil prices, which have stabilized. Even the gold and silver prices, which were hitting a 5-week highs and the 3-month highs in the New York session yesterday, have kind of petered off a bit. There you can see Brent actually unchanged, and we have seen the NYMEX crude oil prices just about holding in green there. The metal space should come on your screens because the profit taking really can be seen there. Well, remember, winter is not exactly a strong demand period, and even as the long-term fundamentals are still positive, there is a deficit there. But at this point in time, the markets would want to watch out for the demand coming back before we can see some more buying. Aurobindo Gayan joins us to talk strategies on that. Aurobindo, hi. What is your sense on metals right now, with most money managers still allocating weightages and funds in this space? What side are you betting?
Well, when we talk about metals, I think industrial metals have started to show some sort of profit booking as we are seeing the year started. And precisely, I would say some of the commodities like aluminium and copper have started taking a bit of correction. I think some more profit booking is something that is due in the market, because the kind of run-up rally that we had seen in the month of December was excessive. So a good amount of profit booking we could see. So let the price correct a good amount from here, maybe another 3 or 4%. That is what we are looking at maybe in next couple of trading sessions from here. And post that, probably we can get into a fresh buying again.
Also, Aurobindo, what's your sense on the crude oil prices now? Because we saw a fresh 2.5-year highs yesterday, unable to hold there. But are you looking to buy all dips in this space?
Well, it's now stabilizing around $60. That is far reach resistance is broken, and immediate resistance that we are looking at is at $62, so which is closer by another $2. So I think the momentum is still on to the positive trend. So I think any correction in the prices is something that should be a buy, and we should look at 59.5 is our very good support level. So basically, crude oil is going to move in the range of $59 to $62 for NYMEX crude. So any range of decline in the price should be a buying in crude oil on lower levels.
All right, so it is more buy calls in commodities continuing. Aurobindo, thank you so much for joining us with your strategies today. But really, buying is what we are seeing in the cryptocurrency market as well, in the global markets, where, of course, Bitcoin perhaps isn't doing so well after making those headlines every day in the last year. But what really seems to be jumping up right now is the other altcoins, like perhaps a Stellar, a Dashcoin, an Ethereum. All those currencies are jumping up. But of course, we have been hearing statements in last couple of days from the finance ministry, government, etc., that their stand on cryptocurrencies stays put on what they started with in December 2013, that the virtual currencies are not considered lawful or a legal tender in India. The government, as of now, is awaiting the expert panel report on cryptocurrencies. We are yet to make a decision on how do we want to treat the cryptocurrencies in India. But having said that, clearly the investment numbers or the global trade that India is seeing right now is much higher than where we were in January 2017. So that, of course, comes in as a bit of a concern. The finance ministry also has said in a report yesterday in Rajya Sabha that they have identified 11 cryptocurrency exchanges right now. There are 785 virtual currencies that are being traded globally, but it is about the committee under Secretary Economic Affairs Department, which is examining all the aspects on how this should be treated, taxed or banned. So those are the details that we are awaiting at this point. But let's get in more perspective. We are joined by Rajiv Agarwal, who's ex-whole-time member at SEBI. Mr. Agarwal, hi, thank you so much for joining us. You, of course, have been writing and talking about virtual currencies in past few days and months. What are the concerns that the Indian government, the RBI and the finance ministry really seem to be looking at right now?
Thank you very much, Manisha. The point which I would like to make is that first thing is that the most important point is that the Bitcoin cannot be accepted as a legal tender, or it cannot be accepted as a currency. Internationally, if you see, it is being promoted as a future international currency. That is where I have the most of the objection. And in the today's setup, where the central banks are controlling the currency, no currency other than the domestic currency can be accepted. So my concern is that if Bitcoin goes much farther, then there may be some lobby which may push it to be accepted as a currency. There I think I have a very grave concern that there will be a threat to economic sovereignty of the country. I mean, how can it be accepted as a currency? Because it will undermine the domestic currency. This will have many implications. I mean, central bank will lose its power, monetary power, and also the wealth of the citizen will be eroded because the wealth is lying in the domestic currency or its equivalent. That is the point.
Mr. Agarwal, your point is well taken. That is something, of course, that the government and etc. has been putting out as concern as well. But, you know, the cryptocurrencies have been around since 2013. The government is yet to take a decision on that. In the meanwhile, we have 11 exchanges, many startups, many more miners which have crept on. One report from Fitch actually shows that the job listings in last year in cryptocurrency space surged by 5,000%. So even as the governments in various countries are still tackling or trying to understand the impact of this, people definitely are investing, getting into this in sense of job creations and startups.
No, the issue is that as far as exchanges from where the people are buying the currency, they are not the authorized exchanges in India. Okay, and people can buy anything online. I mean, today's world, I mean, they can buy anything. I mean, it's like online shopping. So what can be done about it? And the warnings are being issued by many people. So as far as this issue is concerned, this has to be tackled separately. And if the government finds that there is too much of indulgence in this, then some other legal provision may be brought in so that people keep away from that. But as far as India is concerned, this currency is not being traded on any authorized exchange. So it's like buying anything online.
So, Mr. Agarwal, if there were 2 or 3 points that you would want to put across and how it should be dealt with at this point in time, what that really would be? Of course, the expert panel is looking into it, but what needs to be put forth? I mean, of course, there have been warnings, as you mentioned, but what really needs to be done immediately on this?
No, the thing is that first the government should form a view, and I think the government is already forming a view that this cannot be accepted as a legal tender. So this should be very firmly put into the public domain. And then the implications of this should also be told to the public. And no exchange. And if there is some Indian exchange which is trading on these currencies, they should be stopped from doing that. Because in India, no such thing can be traded on any exchange which is not recognized exchange. So if some exchange is trading that, so that has to be completely stopped and legal action has to be taken. So thing is that the central bank and the government may have to do some kind of create some kind of public awareness about it, and some legal provisions may also be brought in to keep people away from that. Because once the incidence becomes too much and the indulgence becomes too much, then there may be counter pressures at a later stage. So I think that this is the right time when the action should come. And I think government has already started acting on this issue. And I think government has given clarification that this is not a legal tender at all. So people may not be having this kind of feeling, and they may not be indulging in these kind of trades, presuming that this is a legal tender or this may become a legal tender in future. As is being intentionally sort of
projected,
set,
maybe.
On internet. I mean, I'm seeing so many promoters or proponents who are marketing it as a legal currency, feed of currency.
Sure.
Yes, thanks.
Mr. Agarwal, thank you very much. Appreciate you joining us with those details. Manisha, thanks very much. So skepticism here and I mean, enthusiasm abounds.
My only concern is it's been too long and too many people involved in this. I think an action or whatever it is needs to really come in now.
Needs to be put out there. And I think in a way the government has.